April Fool's Day just after the close. Matt McAleer, Director of Equity Strategies, Cumberland Advisors. What did we see in Q1? Let's take a look at this first slide. It just gives you an idea on very broad indexes where the activity was, where the performance was. We see IWM, we've been talking about that, right? Russell 2000, plenty of strength, over a 13% return. Dow Jones, solid, 8 and change. S&P, 6 and change. Look at EFA, EEM, and FM, the frontier markets. Very tight performance there, but solid performance. We'll take that as a continuation that international markets are improving. They're not showing the same gusto as the U.S. is, but still improving. Let's dig down a little deeper on this second slide and take a look at domestically where the performance was. I've shown this slide before. On this slide, on the right-hand side, what we're showing is the performance of different size indexes and different styles, growth, value, versus the S&P. So this isn't pure performance. And the example of that is, let's look at the strongest performer over the first quarter, IWN versus S&P. That 13.46, folks, is showing that that index outperformed the S&P by over 13%. We've spoken about small cap, but that small cap value, that is wild outperformance. Now, we had some participation in that, but I look back at that number and I'm disappointed that we didn't have a greater allocation to small cap value. Made it up in some small and mid cap and certainly in some equal weighted. But boy, the small cap energy and small cap banks really drove performance there. Weakest area, we've been speaking about that for a little while. Look on the bottom there, IVW. IVW represents S&P's growth index, not the S&P 500, but the growth names within the 500. Underperformed a straight S&P by, call it 3.5%. Again, that's still positive performance, just underperformed the S&P. So it gets back to what we've been discussing, and that is trying to barbell our portfolios here. And I've mentioned, John talks about that with fixed income, barbelling short-term maturities versus long-term in a bit of a rising interest rate environment. Well, we're in an environment right now where we have nice breadth across the equity markets. It doesn't pay for us just to sit large cap growth like it has for the last 3, 4, 5 years. Have to keep on our toes and keep pushing money into these areas that are improving. Now, if it was that easy, it would be push button. What we have to try to figure out now and watch day to day, week to week in terms of relative strength is this move that we saw in Q4 and Q1 at a small cap and specifically value versus growth. Just a semi-dead cat bounce, a reversion to the mean trade after 5 years of real brutal underperformance versus the S&P, or do we have legs here? Remember, we go back 15 years, we go back 18 years, 2002, 3, 4, 5. You wanted to be small mid-cap for a long time. You also wanted to be international. So we're continuing to stay diversified on the international front. Can make money in emerging markets, can make money in developed markets. Nice breadth. That's very positive for markets when you can make money multiple ways in multiple styles and sizes. So let's see what the first week of April brings. Everyone enjoy the holiday weekend. We'll see you next week.
Good afternoon. It's John Mousseau. I am the CEO and Director of Fixed Income here at Cumberland Advisors. It is Thursday afternoon on April 1st, and we're entering a holiday weekend. This week in the bond market, fairly quiet. 10-year bond and treasuries down at 167, down a tick. 30-year bond 233, down 5 basis points in yield. Really a little disappointing on the initial jobless claims today. So they were at 700,000 plus. Numbers we're expecting in the 675 range. So the markets are a little disappointed there. Muni bonds really unchanged at the week. So the 10-year AAA scale is at a 113, the 30 years at a 173. Those are fairly low yield ratios to treasuries. Not nearly as low as they were back in mid-February, but still low on a historic basis, and we think still signals a tax hike coming. One of the reasons that you're going to think that there's a tax hike coming was the president's unveiling yesterday of a $3.5 trillion infrastructure program. We call it infrastructure. It is not just for infrastructure. It is for your traditional bridges, roads, tunnels, yes, but also water projects, broadband projects, housing projects. So there's a lot in there. Do you end up with all of this? Probably not. There'll be some back and forth with the Senate on this and the House, and there's some Republican resistance to this. And there's certainly some spending fatigue that's setting in. But we do think you're going to get a pretty big plan. One of the things we worry about here is we've never seen stimulus on this level hit the country. Some people are comparing it to what happened with President Roosevelt back in the 30s. There's a heck of a big difference. The unemployment rate there was like 25%. You know, the unemployment rate now is much lower in the single digits. So from that standpoint, we hope that we don't see inflation down the road, but we do think you're going to see some inflation expectations higher down the road, as we've said for a while. So this week where yields were down a little bit of backing and filling because rates have come up so significantly back from last August, for example. Investment grade corporate's a little tighter this week, taxable munis a little tighter this week. So really a week without much supply in it, and you're really typical of a holiday week. Interestingly, tomorrow the bond markets are open for 3 hours because we have a employment number tomorrow, non-farm payrolls. We will be watching that carefully. We hopefully see that in the mid to high 600,000 levels, that the economy is continuing to add jobs. And of course, as we roll out vaccinations and get to higher and higher levels, we expect to see spending pick up and the velocity of money pick up. And that, of course, should add a little bit more to the inflation expectations as we go down the road. We hope you all have a great holiday weekend. And we have the beginning of one season. It's opening day in the baseball season. And we're going to have the conclusion of another season, the Final Four in NCAA basketball. So we hope you enjoy the sports and enjoy the weekend.